Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, February 11th. We are here again, back in the Bay Area, back for the Market Open. This is going to be an exciting show today because honestly, this is why my life is live 24/7. So much stuff happens in the broader equity markets 24/7. And last night at 4 p.m., I could not go live for the market close. But so much was happening. And I wasn't able to cover it. So we're going to talk about it today on today's show. But goodness gracious, Palantir hit a new all-time high yesterday, closed at almost 118. I think we got to like 117.7. I was at a coffee shop in California seeing this happen, and I was like, well, that's pretty aggressive. Number two, Elon Musk tried to buy, forget Openai. He basically tried to buy Sam Altman yesterday with a $97 billion bid privately to buy Openai. Insanity. And I was seeing this news drop and I was just like, I wish I was live right now, but we're going to talk about it today. We got a lot of layers to unpack in terms of the motivations behind it. What's happening? Is it kind of bearish, bullish Tesla in terms of what's going on? So far, the street thinks it's bearish because Tesla is now hitting some new lows. But that all happened yesterday. And then we had a ton of earnings that we got to discuss this morning, along with the earnings that we had in the pre-market today, Shopify, Coca-Cola, and a couple of earnings from yesterday. On top of all that, Jerome Powell is going to be speaking at 10 a.m. So we're going to watch a bit of his testimony. I think it goes for like 5-6 hours. We're going to go for like an hour and just see what he has to say. And hopefully we get some answers to the good stuff. I think that, the questions about inflation, unemployment, the labor market, that stuff is going to have the same answers that he would have during an FOMC meeting. But hopefully we get some new insights on how he's thinking about inflation. And then tomorrow we've got CPI. And right now estimates for CPI are a bit higher from what I've seen than we would like. That was the exact same setup going into the last CPI, and it came in line. Hopefully we come in line again, which would be an increase year over year. So it is accelerating inflation, but it's not accelerating to the point where it's like runaway inflation like it was in 2022. But we're going to have to see how that plays out tomorrow. And quite frankly, if you're wondering why markets are down in the pre-markets, I think that's the reason. I think there's a little bit of fear for inflation going in tomorrow. Basically, like a couple hours ago in the pre-markets, everything just went red. And I mean, everything's been kind of green for the past couple of days, so it makes sense that everything went red and taking a little bit of a breather. But I think a lot of that is based on hesitation on going into CPI tomorrow, which will give us a little bit more insight in terms of what's going on. And then, yes, SMCI earnings today. SMCI is down 5% in the pre-markets. Of course, why not? So we'll see how that one plays out today on the close. All right. Thank you, everybody, for being here. Good morning. Second market open from the Bay Area. We got a lot to talk about, a lot to get into. Thank you, everybody, for being here today. Martin, what's up? Krupa, good morning. William, good morning. Zach, K-Dog, Christina, what's up? Clyde, what's up? Good morning. Thank you, everybody, for being here. Andy, Kevin, Nick Smith, Reza, Rockin' Ronnie, RK, Victor, Gene, all the Lakers. Luka Doncic absolutely smashed yesterday. Absolutely smashed. I caught some of those highlights. That was a great game. Luka and LeBron looks like it's gonna be exciting. For real, Tober, Wick, Torben, Raul, Sanjay, Tiago, Hoder, Kenneth, Chris, good morning. I'm Beneficial. Thank you, everyone, for being here today. And we're going to get started and discuss everything that we have to discuss. Lisa, Broccoli Bob, Krishna, Callie, Trey, good morning. All right, so before we get started with everything, let me first just tell you guys who I met yesterday, because I did say I was meeting some important people this week. We have a couple more people to meet later throughout the week, but this is the guy I met yesterday. So this was a crazy experience. This was pretty dope. This, for those that don't know him, is Baiju Bhatt. He is the original co-founder of Robinhood. So he does not run the company anymore. I think he's on the board, but he stepped down from like a CEO. He used to be co-CEOs with Vlad back in 2020. I got a chance to meet him yesterday, and it was really, really cool. This is him for those that haven't seen him before. First of all, the guy's hair is just amazing. Like, it's just the first thing he did when he saw me is he took my hat off to see my hair. He always wants to see my hair. I'm like, dude, my hair is a mess. Your hair is a little bit more majestic than mine. But he's working on a startup, and the startup is in the space sort of laser infrared energy sector. They're trying to use lasers to bring energy from space and put it back on Earth. And Dude, he was just the coolest guy ever. He was really just the coolest guy ever. The guy's like worth a couple billion. He can do whatever he wants in life, and he's choosing at 40 years old to go on this crazy ambitious mission. And the ambition is kind of proved by the back. I mean, look at the mural in the back. You got George Jefferson on a rocket ship. George Washington on a rocket ship. You have a bunch of other figures that you can't see there, but there's the American flag. They're in space. It's just like, it's crazy. So I got a chance to go to their headquarters, get to talk to them. A bunch of ex-Robinhood employees actually are working for him. So we recruited a bunch of people that used to work at Robinhood with him. And one of those guys invited me to come see him. And apparently he knew who I was. I mean, as soon as he saw me, he gave me a big hug. And I think he's been really grateful for the coverage on Robinhood, and obviously been very grateful for the overall journey that the stock has created in terms of all the retail investors. But it was really cool. It was really, really cool. I've never met someone who is so unique in terms of how they think about solving problems. Again, this guy's trying to solve the energy problem, and I know a lot of people are trying to solve it. The company's name is called Aetherflex, by the way, or Aetherflux. This is the website right here. We can talk more about it one day, but they're doing some crazy shit, dude. It's just crazy, crazy shit. And it looks like sci-fi type of stuff, but they're actually doing it. And they have the funding to be able to do it, because obviously the guy had a very successful, company with Robinhood. He still owns, I think, like $3 billion worth of the company. And so, yeah, it was really cool. It was really cool to meet him and get to talk and see kind of what they're working on. The other really cool thing about it is we were talking about what does it take to build companies, and he added this really good quote, which is that the best way to think from first principles is to not use analogies, right? And what does that mean? That means that when they were building Robinhood, he was like, everyone was telling us you can't make commission free. Yeah, like you can't do commission-free trading. And him and Vlad were like, why? And every time they talked to someone, they were like, well, Schwab and Fidelity have tried to do it and it doesn't work, or Schwab and Fidelity haven't been able to make a business out of it, therefore it's not possible. And that's not first principles thinking. First principles is not using analogies to be able to come to a conclusion. First principles is looking at the actual problem and solution in and of itself, and then trying to see what are the nuances of tackling the complexities of it. And so when they're attacking the space solar thing, they're doing it from first principles. A lot of people have said what they're trying to do is not going to work. But a lot of people said that about Robinhood as well. This is just a problem at a different scale. But nonetheless, if you're trying to do something in life, you can't look at other people's opinions or other analogies for why it won't work. You have to look at it intrinsically to see if it's possible or not. And so that lesson alone, is just very valuable, and seeing how he talked about it was super, super cool. So exciting stuff. I'm meeting some other people this week. I have a podcast at a CEO's headquarters that you guys will see in a few weeks, and I think you guys will enjoy seeing that. So yeah, some cool stuff, and we got some other stuff going on throughout the rest of the week as well. Testimonies at 10 a.m. So in about 2 hours. So for me, it's 7 a.m. So in about 1 hour, you will see Jerome Powell be live, and we'll see him. It's not Vlad. It's not I promise you guys, it's not a podcast with Vlad. I love Vlad, but I know the podcast is with a brand new person we've never done a podcast with before. So it'll be cool. I think you guys will enjoy it. All right, let's get into what we got going on in the context of the macro. Oh yeah, Anduril. There's some news on Anduril today. I mean, we don't have it yet, but Anduril tweeted yesterday. They were like, the news that we're gonna put out tomorrow is gonna like blow your socks off or something like that. It's gonna like detonate you or some wording that they used. Yeah, Palmer Lucky says your mind will detonate when you find out what our investors already know. Stay tuned for next week. They were commenting on the leaked fundraising round, and then Anduril quote tweeted him and said, tomorrow you'll see. So today we're probably going to get an announcement from Anduril. Maybe it's a round of a fundraise, maybe it's more growth. We'll see what happens, but it does look like we got some crazy stuff going on with Anduril. As Doug says right here, I am ready to detonate. I don't think they're going to DPO tomorrow. I think they announce it. If they do, that'd be crazy, but that'll be fun to see. I'm not joining Graham Stephan on the iced coffee hour, no, but I am making my own podcast channel, because this podcast that I'm doing is going to go separately on an actual Amit podcast channel. So we are starting that soon. So I'll put the link in the chat in like the next couple of days. You guys can subscribe to that, but that'll be the official channel for just Amit podcast. Okay, cool. So let's get into what we got going on from yesterday. So I think we start off with the Elon Sam Altman story. I mean, this thing was crazy, dude. This thing was insanity. I get this notification. I'm walking down the beautiful mountains in Palo Alto, and I'm seeing this tweet and I'm like, this can't be real. Elon Musk-led group makes a $97.4 billion bid for control of OpenAI as per the Wall Street Journal. Now, there's a lot of layers to this. And I think there's a variety of different things to talk to when it comes to this. SMCI earnings is going to be after the bell today. Again, Chris and Matt will be live. I will not be live today, but Chris and Matt will be live. So on their channel, they'll be talking about SMCI. Sam Altman responds as soon as this comes out at like basically 4 o'clock, right after the market close. No, thank you, but we will buy Twitter for $9.74 billion if you want. So in terms of the disrespect, like this is pure disrespect. This is Sam Altman saying, yeah, screw you, screw your offer. We don't care what you think you're going to do. We are not going to accept some $97.4 billion bid. We are going to do whatever the hell we want. Now, the problem here is that Sam has a fiduciary duty to actually bring this up to the board of directors, because if you're going to be a for-profit company, not just a nonprofit, and someone offers you a bid for the company, like you got to go to the board and they have to approve or deny it. So like legally, this is actually how Elon ended up buying Twitter. His bid had to get submitted to the board, and then the board realized that, yeah, $44 billion is actually a great deal. We have to take this for our shareholders. Otherwise, we would be essentially committing fraud by not taking this offer. And so Sam Altman now has to go to the board and see how this ends up playing out. Elon's lawyer says that all of the money from Elon's and his group's $97.4 billion for OpenAI's buyout offer will be used exclusively to further OpenAI's original charitable mission should OpenAI accept the offer. Sam Altman said publicly he wasn't at OpenAI for the money and was doing it because he loves it. So essentially, Elon is putting Sam in a tough spot by pushing him to prove that what he said is true. Elon's lawyer said that Elon and his investor group are prepared to match or exceed any bids higher than their own. I wonder who are the other investors with Elon that are putting up $97.4 billion. Because look, could Elon get $100 billion overnight? Probably. But I'm pretty sure he had to talk to some people over the past couple of weeks to make this happen, because there's no way you just put up $100 billion out of nowhere. And I'm really curious who else is part of this group that's like essentially ready to go against OpenAI. His lawyer said if Sam Altman and the present OpenAI board of directors are intent on becoming a fully for-profit corporation, it is vital that the charity be fairly compensated for what its leadership is taking away from it, control over the most transformative technology of our time. Sam Altman may not want to accept Elon's offer, but ultimately it's up to OpenAI's board. We do have a group of some of the investors. So you have Joe Lonsdale in there. You have Barron Capital Group. That's Ron Barron. You have XAI. You have Valor, Vi Capital, and then Endeavor CEO Ari Emanuel. So you do have a decent chunk of people that are ready to bid for OpenAI. Obviously, those are people that do not like OpenAI or what OpenAI has become. And you got Elon, who put in $40 million back in 2015 and thought he was funding a nonprofit. And it's not a nonprofit. It is a for-profit company. And now this is a $97 billion headache that Sam Altman has. Because at the end of the day, if they don't take it, then there has to be a reason why. If they do take it, then there has to be a reason why. Here's some more updates on what's going on here, but this story is absolutely insane.
At the Artificial Intelligence Action Summit.
I think it's to slow down a competitor and try to catch up with his thing, but I don't really know.
Yeah, but you know him well, right?
To the degree anybody does.
Kate Rooney joins us now with more and what it means for the AI platform. That's probably a pretty good price, I guess, long term.
Yeah, Joe. Well, you heard from Sam Altman there. This really is an unwelcome bid on OpenAI's side, throwing another wrench in its plans to become a for-profit business. Then you got Musk, a co-founder of OpenAI, and he started a competing firm, XAI. He did sue to block that corporate restructuring, and this $97 billion bid is his latest counterattack. Musk's lawyer calling that conversion basically unfair, saying that the nonprofit is going to be giving up control of the business in exchange for a small stake in this new entity. As he put it, who on earth would make that trade? He says it is in the public interest that OpenAI is compensated at fair market value, says that cannot be determined by insiders negotiating on both sides of the same table. Altman.
Here's what Sam Altman said this morning.
Now, Elon Musk making a bid
Apparently.
for OpenAI. Your response, you're turning him down for $97 billion.
I mean, look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to.
Basically, Sam is saying no one uses Grok. He's saying no one uses Grok, and that's why he's coming after us, because he's realizing he's losing against GPT. I think that's what Sam Altman feels. Obviously, we'll hear from Elon eventually more on this, but I think that's why he thinks this is happening.
Compete with us from a technological perspective, from getting the product into the market, and I wish he would just compete by building a better product. But I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this, and we'll try to just put our head down and keep working.
Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing into anything or going anywhere.
Okay. What is your main mission here at the Paris AI Action Summit? You got Stargate. There's question marks about how much you're actually going to commit to that. Maybe you can give us some numbers on that, Sam. What is the messaging here from you and the team?
So I've been to an earlier version of this at Bletchley Park, and that one was more focused on safety. This one, people are still talking about safety, but really I think people are now saying, okay, this technology is here. It's having an incredible impact. We've got to drive it. There is a lot of questions about how people can, maybe the most common question I've gotten is, can you do a Stargate in my country? We need infrastructure here. We want to do this. Can you help?
So obviously Altman is basically trying to make the argument that, hey, Elon's probably trying to compete with us, and that's why he's doing this. And, either he's going to be able to compete organically, or he's going to have to go through the courts to be able to get this done. What's my take on this? Honestly, I don't know enough about this lawsuit yet. I'm trying to learn more about it. I'm just surprised when I saw the headline yesterday. I was like, 97 billion. Like, the fact that they're putting in that bid means that, here's my thing. The fact that they're putting in that bid means that Elon definitely is not, Elon is definitely not happy with OpenAI. But if Grok was winning as dramatically as they should be winning, then I don't think he would be that obsessed with OpenAI either. Like, Elon's a winner, right? Elon's a winner. He doesn't really care about losers. And when he wins, he wins. He's not bad mouthing Rivian all day. He's just beating Rivian. So the fact that he's so obsessed with this, first of all, to his credit, the guy funded it, right? And he was funding a nonprofit, turned into a profit. And now it's obviously I would be salty about that too, especially if I lost a ton of money that I should have had in terms of equity if it was going to be a for-profitable company. But if he's not winning in terms of Grok versus GPT, I could understand the impetus to get even more excited to sue the guy and to try to reclaim what was rightfully yours, which was initially OpenAI, the nonprofit. So I think there's a level of Grok's not winning as much as GPT, which is just a fact. I mean, GPT has 300 million weekly active users. I don't know how many Grok has, but Twitter itself has 600 million weekly active users. I can tell you firsthand, not a lot of people on Twitter use Grok from my experience. I mean, I use Grok. I used Grok yesterday, but I don't think a lot of people use Grok on Twitter. Or X. So I think from that perspective, there is an argument that he thinks maybe they're not getting enough of the pie. But number two is, to his credit, Grok has the best proprietary data. Elon doesn't, or GPT doesn't. Right? GPT has the steal data. Grok has all the data coming from the sources of people's actual tweets. So I think there is a competitive advantage to Grok, but I think the first mover advantage is working for GPT, and Elon's upset about that, and now he's going after OpenAI. What it is, though, and I think the best take that we heard yesterday was that this is Drake and Kendrick Lamar for tech bros. This is, for those that don't know too much about hip hop, Drake and Kendrick Lamar had an epic beef throughout most of 2024, kind of still going in 2025. And Elon and Altman arguing with each other publicly is basically that for tech bros, seeing them go against each other. So Elon, by the way, responded to what Sam Altman said and called him a swindler. So I mean, also Elon changed his name to Harry Bowles, and his new description is a shortfall of gravitas. This is it is what it is. This is Elon being Elon at the end of the day. Now, in terms of Tesla stock, which is a nice kind of transition right here, Tesla stock kind of in the good. Oh, by the way, guys, I had lunch with Jason yesterday, or a dinner with Jason yesterday. We're gonna do it. We're gonna do a stream on Thursday. Market close on Thursday. So there was Jason. Went to a nice dumpling spot, Steam, in Palo Alto. If anyone knows this place is awesome. But yeah, we'll do a market close on Thursday together, so that'll be fun. On Thursday, we'll be in his studio. By the way, he has a massive Cybertruck, and Yeah, I got to be in a Cybertruck for the first time, and it was amazing. But Tesla right here, 346 new lows, down 1.17%. Why is it down? Well, the whole market's down today, and I actually kind of don't know why everything's turning red. Maybe it's fears of JPOW and CPI, because literally everything is turning red right now. But outside of just the macro turning red, I think it's because people are kind of getting annoyed at this point of Elon fighting every single battle and not being as focused on Tesla. Now, do I care about that? My personal 2 cents is no. I really don't care. In fact, if Tesla gets below 300, that's like, it's not going to be, I'm not going to be the most upset guy in the world because I don't have a heavy stake and I would like to have a heavier stake. And I don't really care what Elon does in terms of his political time, because I think FSD and robotics, once they scale, whatever politics and political ambitions he have, doesn't matter. But you got a lot of people that do care about this. And I read a couple equity reports this morning that put out notes. Oppenheimer put out a note that said they think Elon's way too distracted. Again, that's probably an easy way for them to tell their clients, hey, we told you to buy it at 400. It's at 340. How do we explain what's going on? Oh, it's not our fault. It's Elon's fault, right? So it's an easy way for the sell side to kind of blame politics on why Elon is or why Tesla's not executing. I really don't think it's just about that. There's probably a part of that, but I don't think that's the only reason. Nonetheless, it is a reason. And because it's a reason, you got people that definitely aren't happy about Tesla stock performance right here. But I wonder who's selling, right? I wonder, is it institutions? Is it retail? Like, kind of, how is this playing out? All the institutions in January upgraded Tesla to 400s. We got another upgrade yesterday to 425, up from like 275. So we're definitely getting the street on board. The question is, are they happy with Elon's politics? And if they're not, there's a world where this thing does not end up being as pretty for Tesla, at least in the short term. And so we're gonna have to see how that ends up playing out. And look, if Tesla does take a nasty dip again, I have 40 shares. I would like to have 400 shares. So I wouldn't be the saddest about having that opportunity. It's just a question of, will we get that opportunity? I put on Twitter last night, why do you think Tesla's down 8% year to date? I would love to hear some answers. I'm pretty sure some of you guys think it's political. Some of you guys think it's more so about the lack of registrations in Germany and China. But the street upgraded Tesla across the board to 400, unsupervised FSD launching in Texas. Robotics are continuing to see traction, even though no commercial deals. We are seeing that by the job listings in Tesla in terms of how much hiring they're ramping up for robotics production. But it's still down at this point, more than 8% year to date. Now it's down, I think, about 10% year to date. And so almost, if Tesla goes back to 275, the entirety of the Trump pump since November 6th gets wiped away. I don't think that's going to happen. But if that does happen, that's one thing that we have to see in terms of how's the market ultimately going to interpret what is happening with Tesla and what is going to be the future, at least in the short term, for Tesla. Again, long term, I think none of this matters. I think robotics, FSD, is just, these are the bullish elements of the Tesla thesis that you have to be a fan of, regardless of what is happening in the short term. But in the short term, you could see some issues in the context of Tesla. Tariffs don't affect Europeans built Tesla. That is correct. Also, the China ones are not going to be as effective. Elon or Tesla and Apple usually tend to have some exceptions from here. Also, the tariffs in the United States, again, because Elon's building a lot of cars in the United States, he gets away with some of those exceptions as well. I mean, there's a lot of ways that tariffs aren't going to affect Tesla. So I don't think it's the tariffs thing. I think tariffs is an easy way that Elon gets out of it, especially because China gives him so many loopholes. America gives him so many loopholes. They don't manufacture that many of their cars. I mean, they have the Berlin factory, but it's not as significant as what we have here in the States. So it's just a question of like what the perception is around the stock. Again, this is a narrative-driven stock as well, right? And so if the narrative is ugly, the narrative was great after earnings when Elon said we're going to be bigger than the top 5 companies in the world combined. I mean, if the narrative is not good right now, then that's why we're seeing a little bit of pain. Michelle says, hey, Amit, yesterday my mom was asking me, when does that funny guy you watch come on? So look, someone thinks you're funny, LMAO. She proceeded to call you a professional yapper. I'm happy that she thinks of me in such high regard. I appreciate it. She was like, he talks a lot, but man, he's good because he just keeps talking with no script. Well, it's honestly, the script is the chat. You guys lead me for the 3 hours by putting in these comments and then send me on a tangent. So that's that's how this plays out. Did you sell out of your SMCI yet, Amit? No, but in the group chat with Chris, Matt, and Steve, I was in the Uber yesterday on the way to go see the Robinhood co-founder, and I'm texting them. I see that I'm up $3,000. I'm like, guys, it's time to fucking sell. It's time to sell. It's time to sell. This is stupid. We got a 15% pump before earnings. Like, what are we doing? It's time to sell. And one by one, all of these mother effers are like, You don't get it. You don't understand. You have no balls, yada, yada, yada. I get just like bullied by the chat, and they're like, we're holding on, blah, 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 blah. And just this morning, I looked at SMCI. I'm like, oh, down 5%. So I texted in the group chat. I said, I just want to hear that I'm right. I just want to hear that I'm right. And I have no good answers. I have no Steve's talking about CapEx. I was like, dude, I don't care. SMCI is probably, I don't know. It's probably 102 years, whatever. But we got our 15% pump before yesterday, or before tomorrow, AKA today. And I feel like you sell on that earnings pump. And these guys were just like, no, we're not selling. And so I held it. And so now that it's down 5%, I'm just going to keep holding. I don't care. I'm not even going to, like, at this point, we're going down with the ship. We're going down with the ship, down 4.5%. So, dude, we were up 17% yesterday. It wasn't even up 15%. It was up 17%. And I was telling them, I think it's time to sell. And they're like, nope, we're holding on. So, this has truly become about the content at this point. It's not even about the money. So whatever. Now we're holding on. I'm not going to be covering earnings live. So after earnings, I'll take a look at my phone and see if I get to send a witty text to the group chat. But they all had so much confidence, bro. They're like, nope, you don't get that. And then they're like, well, you're holding on to Palantir. It's trading at a 500 PE. How are you complaining about SMCI? I'm like, first of all, don't bring up Palantir, okay? Like, we're not talking about her. We're talking about this one. We're not talking about her. That's my true love. We're not talking about my true love. We're talking about my side chick. And on my side chick, I kind of want to take some profits. And they were like, nope, this is not the time. So I said, all right, whatever. We're going to do what we have to do. But yeah, we'll see what ends up happening with SMCI today. Hopefully this thing just keeps going higher. Hopefully, but now I'm going down with the ship. Now I'm going down because I could have sold yesterday for more. I mean, I think it does. I mean, look, if they have a good earnings, I think they recover back to where they were yesterday in the morning. So we'll see. But it'll be interesting to see what happens with SMCI tonight. Yes, take my stock's name out of your mouth. That's what I want to say. Every time I have a question, they're like, well, what about Palantir? You're holding on to Palantir, and Palantir is so expensive. I'm like, yeah, but that's Palantir, okay? We're talking about Palantir, not SMC. We're talking about Palantir, okay? This is a whole different question. You can't bring that up and act like it's the same thing. Jason just tweeted this video. Let me show you guys this video. He picked me up from a coffee shop yesterday. Let's watch this.
Driving in Palo Alto, red light district.
Yeah, he picked me up.
See what kind of riffraff we could pick up here.
Where am I? There am I. There you go.
Hey!
Is that paper
Who's
gains?
this guy? Driving.
He clipped it at the end, but then I say, I don't think you bought this Cybertruck with some paper gains. So he missed the joke. Of course, he missed the joke. But yeah, we'll be doing a live stream. We'll be doing a live stream soon. It'll be fun as on Thursday for the market close. All right, let's listen to this guy, Mike Wilson. So for those that don't know, Mike Wilson from Morgan Stanley, this guy was super bearish 2023, 2024. Ended up, being wrong, and he's one of the most respected guys in Wall Street, but he was wrong over the past couple of years in the bull market. So it's been kind of interesting to see his pivot into being bullish, even though he's not really bullish. So here's what he has to say. Let's get his perspective, see what he's thinking about the broader markets, and then we'll keep going from there. Why are you so short? Look, I don't, you got to ask my mom and dad, but I can't do anything about that. All right, here we go.
That markets will be choppy for the next 3 to 6 months, and he views a broadening in the earnings recovery as critical to his year-end S&P price target of 6,500. We are happy to welcome back Mike Wilson to Squawk Box. He is Chief Investment Officer, Chief U.S. Equity Strategist for Morgan Stanley. It is great to see you after quite some time. Nice to see you, sir.
Yeah, good morning.
So you think the next couple months are choppy? Does that mean don't do anything and wait for some kind of dip based on the sort of longer-term arc you've got going?
Not at all. I mean, look, we made that call back in November, December, just saying, look, we priced a lot. 6,100 was kind of our short-term target. And look, there's a lot of news coming out, and we think the growth, so the policies initially are sort of growth negative, which is, immigration sort of enforcement, and of course the tariffs, and that's just a lot of noise. So we're just digesting that. Plenty to do underneath the surface. I mean, financials have been phenomenal. We've seen it broadening out to some degree. In fact, software over semiconductors has been a great trade for us because as
software over semiconductors,
right? Because of the fusion of tech now and the application layers being built out, and we think that got confirmed a bit with the DeepSeek, announcement. So,
do you think that the semiconductor game is taking a pause, or it's over, or what?
Well, it has taken a pause. I mean,
I know it's taking a pause, but is it forever a pause?
Of course not. I mean, it's a cyclical group, and look, away from the AI beneficiaries within. I mean, CapEx has been pretty weak for most other semiconductor type spending.
Right.
And of course, now with this DeepSeek potentially leading to the next excitement part of AI, which is the diffusion of it in the application layer. That's the opportunity, is going back into the software stack.
Like there was a time where you were worried about, I think, earnings, which could forecast like a slowdown in the economy that could have been the R word, could have been a recession. That never happened.
That's right.
Is it? Have we learned to manage the economic cycle where it doesn't have to? Are we closer to it happening now because it didn't happen, or does it not have to happen unless there's a mistake?
Well, I think a couple things happened last year. What we missed is, I mean, we didn't miss it, but we actually called for it, which is a rolling recession. I mean, we've had recessions in many, many industries. If you think about the last 2 years, we've been in a recession in housing, in autos, in manufacturing, in consumer goods. A good part of the economy has been.
So we're not closer to that inevitable day of reckoning for something happening.
No, I mean, I will say this. I think what could be interesting this year is you could have a recession in government, right? If you have a recession in government, that may actually cause unemployment to go up to a level.
That could cause a recession.
That's right.
Yeah.
But it may not be that bad, Joe, for the rest of the economy because they've already been in sort of this soft recession. So that's actually our bull case, is that the government shrinks. The crowding out stops. It allows the Fed to cut rates at some point, and the broadening out can actually happen. A lot to happen between here and there, but that is actually the bull case.
God, that was like a symphony to me. What you just described, is it? And you think that's possible at Morgan
Well,
Stanley?
I think they're working on it. I mean, probably the most underestimated part of the administration is Doge. I mean, I think there's a lot of skepticism around this, but the reality is that's possibly the most bullish thing that could happen. If you could shrink the government in a way that,
it's the end of the free world and a constitutional crisis. I just heard Chris Murphy say that to me. I mean, I'm scared beyond belief. I'm scared where there's nothing in my intestines.
Well, I mean, it's the most exciting thing I've heard in a while. Remember, in the 1990s, we had this great bull market. Now, the thing that really sparked that, in my view, was the budget deal that happened in '94. Okay, now, I'm not sure we can get to that kind of a balanced budget, but if we can make progress on that, it liberates the private economy. That's
and the crowding out that you mentioned.
100%.
It's interesting. I mean, that.
So, I mean, look, he's still bullish on the broader Doge initiative. Now, the 10-year, and maybe this is why equities are down, the 10-year spiked up. Does anyone have a reason for why we went from 4.48 to 4.535 today? I think that's probably why stocks are down. Trump did say he was putting a ton of tariffs on aluminum and steel yesterday, but I think the market already knew about that. So I don't think that's like anything new. But equities kind of universally took a little bit of a dip in the pre-markets and are still dipped. Probably based on this 10-year going up. Oh, Trump signs executive order mandating 25% tariff on all steel and aluminum from all countries, 0 exceptions. Okay. So that is like, I think, the headline from last night. That's continuing to have a little bit of an impact here. Powell, well, yes, obviously Powell as well. So a little bit of fear with what Powell's going to say. That's definitely part of it. Dollar's actually down today, which is nice. But yesterday was a green day, bro. Yesterday was a green day. Like towards the end of the day, it was green. And so this pre-market, we're kind of giving back a decent amount of those gains as well. Nonetheless, Mike Wilson thinks, hey, we are closer to a government recession versus an actual recession. Will we have a government recession if we cut that much spending? I guess we're going to see. Does that have implications on GDP? 1,000%. The question would be to what extent of those implications exist, and can earnings growth continue to outweigh some of the downside spending or some of the downward cuts in spending that Doge is trying to get the government to engage in? And I think the 10-year and the dollar are going to give us a lot of hints. We know Scott Bessent, the Treasury Secretary, is like steadfast on getting that 10-year yield to come down. That is going to be great for mortgage rates, great for the housing market, great for just long-term yields, allowing inflation expectations to go down, which hopefully should get the prices of eggs down, right? Like there's a lot of different things that they can do to be creative here. But the question is if they can get that 10-year ultimately to come down. Tesla down 1% in the pre-markets. Palantir, we'll talk about them in a second. They're down 0.5%. Amazon down 1%. Google down 1%. You got Shopify up 1.3%. They have earnings. Robinhood down 1%. Rocket Lab, it spiked up yesterday 11%. That's down 3%. And then Nvidia as well was up 3% yesterday. That one is down 1% in the pre-markets. Alibaba is actually up 2.09% right now. Okay, so earnings. Let's talk about Shopify. We had Shopify earnings. Let's bring up those numbers. By the way, Robinhood officially unveiled options in the UK. Robinhood officially unveiled options in the UK. So for those that are in the UK, if you use Robinhood, I would love to know your experience about it. But we got that news late last night. And then we'll talk about Shopify earnings. But Robinhood is now rolling out U.S. equity option trading to UK customers with plans to roll out tax-free stocks and share ISAs within a year. This move comes after getting approval from the UK regulators and follows the launch of margin trading in the region last year. I read the Morgan Stanley report on Robinhood last night. I got the report. They are bullish, guys. They are bullish. They have a bull case of $88, which is 66 or 60% upside from here. And if you look at their estimates for Q1 and not even just Q4, I mean, they're bullish. They really think Robinhood's going to grow more than 30% next year. And they think that growth is going to be fueled by all their new initiatives. So Morgan Stanley, very bullish. We have earnings tomorrow. I'll be live for earnings and we'll see how that plays out. But a lot of the street is definitely thinking that this thing is going much, much higher from here right now. The reason why Baba is up is because Apple partners with Alibaba to develop AI features for iPhone users in China. So that's why Baba is getting a bid of 2%. Whereas Apple is up about 1% as well. So it looks like Apple will now be collaborating with Alibaba to be able to bring Apple Intelligence. Again, they can't use OpenAI because it's banned in China. They can't use Gemini, Claude, etc. So looks like they're going to be partnering with Baba and their models to see how this ends up playing out. Shopify numbers. So we have 44 cents versus 43 cents. That's a beat. 2.8 billion versus 2.73 billion. That is also a beat. Shopify was red in the pre-market when I woke up. Now it's going green. It fell to all the way to 106. Wow. Now it's back at 121. Look at that. If anyone bought that dip, congrats. That was a nice little opportunity right there. For those in the UK saying that you don't see Robinhood on your or options on your phone yet, I think it's probably going to take a couple days. So I would wait a couple days and just update the app. But if they are rolling out options soon, then hopefully you guys will have access to it and can see what the experience is like. But I imagine some of you probably already have it. So there was the Shopify dip, went from 125 to 106 in the pre-markets and then gapped up right back here to 122. So looks like the market was okay with the earnings, but needed a little bit of time to digest that. After Shopify, we have Coca-Cola. Coca-Cola beat on the top, 55 cents versus 52, and then 11.4 versus 10.7 on revenue. So that's a beat as well. Coca-Cola stock is up 4.5%. Okay, there you go. Coca-Cola. So got some love for them. And then what else do we have today besides Coca-Cola and Shopify? We have Humana. This is a healthcare company, right? If I'm not wrong, or a biotech. They missed on EPS, 216 versus 212, 29.2 versus 28.8 billion. I know a bunch of politicians own this one, if I'm not wrong. Humana. HUM, they're up about 3.67%. They're up 3.67%. Powell is speaking at 10 a.m. So in about 35 minutes, 35 minutes. We will see what Powell says. Oh, and then we had SPGI, S&P Global. They beat 377 versus 347. If anyone wants to see the results, this is the Twitter account that has the results, so you can check it out. And you can look at it. SPGI, they beat on the top 3.59 versus 3.5 billion, and they beat on the bottom 377 versus 347. Their stock is up 6%. Wow, that's a big move for this one. This one doesn't move 6% that easily. All right, so earnings continue to beat. And that's kind of what we needed to see going into the second biggest week of earnings. But it looks like they continue to beat on the top and the bottom. And if they miss, it's a very slight miss. After the bell today, again, I'm not going to be live, but we have DoorDash, SMCI, and Lyft, Upstart, and Zillow. So those are the 5 that are important. Tomorrow, obviously, we got Hood. That's a big one. We have Reddit. We have HubSpot. We have Cisco. We have AppLovin. And we have Iren Energy, and we have Dutch Bros and Trade Desk. So tomorrow's going to be a big one as well. Hood's going to be a very important one for me and for a lot of you guys that have been following the Hood story. But we do have a bunch of other tech companies that are reporting tomorrow. Humana is healthcare insurance. Okay, that's what I thought. I thought it was in that space. There's a bunch of politicians that own this name. How is this stock doing? Humana stock. We got market open in 4 minutes. Year to date, it's up 5%. Over the past year, it's down 27%. Market cap of 32 billion. Past 5 years, down 29%. Yeah, there are a bunch of politicians that actually own this one, to my understanding. Where's the spec names today? So where's Big Bear AI and all those guys? Spec here today. Soundhound's down 2%. Archer's down 7%. Big Bear is down 3%. Mike Shudgy's down 0.5%. Some of the quantum names are up. Most of them are down. GameStop's down. AMC's down. Oklo's down. Okay, so they're down about 1 to 2%. Nothing too crazy. Kind of similar to the rest of the market. Palantir. Okay, let's talk about Palantir. We got 3 minutes until the market opens. I cannot explain what's happening with Palantir. At this point, it is taking a life of its own. Talked to a couple of people yesterday. And I was like, what do you think's happening? And they're just like, it's now closer to going to 200 than back to 80 because of this momentum. Now, will that happen? Who knows, right? We're going to have to see. But Palantir is now the 38th most largest company on the planet. Forget 250 billion. We're at a $265 billion valuation. We added about 20 billion in market cap, or about 12 billion in market cap yesterday. It's just, I don't know. I don't know what to say. I don't know what to say. This is it's just, I was sitting at a coffee shop watching it go to 117 yesterday. And I was just like, all right, here we are. Like, it is what it is. At this point, I do think the stock is just taking a life of its own, and the market's deciding to give it whatever premium they give it. Again, there is a ton of qualitative ways you can justify it. Numerically, it's very difficult for me to find an argument for 265 billion, other than they truly will have NVIDIA type of growth and the street's just front running that, which is possible. I mean, given how bullish Carp is, it is very possible. It's just they didn't guide for that. And so the street's kind of not believing them on their guide. They're believing them that they're gonna beat their guide and continue to grow even faster, which to justify, 265, you probably have to get to 45, 50% growth. They're guiding for 31% growth. So, I mean, we're going to see throughout the rest of the year. I think if it dips, people wouldn't be that upset. They'll have an opportunity to get in. I think a lot of big money's waiting for this thing to come down. I think if it keeps going up, the media attention will keep compounding on Palantir. And it's just going to be this snowball effect that is very, very hard. So the thing is, if you bought your shares and you're locked in, like, you kind of just sit back and enjoy the ride, in my opinion. Because I think that's how the ride is playing out. Now, could the ride have a little bit of volatility to the downside? Of course. And I don't think anyone would be surprised by that. But so far, the ride continues to have massive, massive momentum. And it's pretty exciting to see how that's playing out. Archer did dilution. Okay, so that's why they're down 9%. Didn't see that. Does anyone know by how much? How much was the dilution? Down 7%. It's probably smart, bro. Their stock is up 300% in like 4 months. For a company like them that needs cash, it's probably smart to dilute. Hopefully it's not by like too much money. But yeah, that's just, I mean, look, when you're investing in a company that's 4 or 5 billion, they're going to do dilution. But as long as it's not aggressive, then that's not horrible. 300 million. Yeah, that's nothing, bro. 300 million. What's their market cap? Market cap 4 billion. Okay. So, I mean, 300 million out of 5 billion is definitely, it's a healthy percentage of their market cap. But if that 300 million allows them to like keep progressing, which they've been executing, they haven't been, sitting around, then I think shareholders will be able to deal with that. All right, here we go. All eyes on Palantir, Tuesday, February 11th, back from the Bay Area, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Hopefully that bell helped you wake up. The market is now open. 116.5 on Palantir, down 0.18%. Archer down about 8%. Palantir goes green. 117. We're back to 117. 117.2. Goodness gracious. Oh my. The floodgates open and it is green, green, green for Palantir. 117. I'm going to check resistance at 118 real quick, and then we'll move on to some of these other stocks and see how they're doing. SMCI, by the way, is down 5.5%. Robin at 55.50. That's down a little bit. Palantir just getting nuked right. Wow. Got hit at 117.4, now back to 116. Some violent action right there. 118 has 57,000 shares. So if we get back to that high 117, 118 has 57,000 shares. Shopify is up 2%. Coca-Cola is up 5%. SMCI down 6%. Tesla is down another 2%. 344, $4 away from the 330s. Just a slow, gradual, painful decline on Tesla every day. GameStop is flat. Netflix is down 1%. Carnival Cruise down 1.3%. I don't know why the cruise lines have been falling the past couple of days, but they have. If anyone knows why, let me know. But they had good earnings, but they're taking a little bit of a dip. Amazon, 232. Google, 185. DraftKings, 42.81. BlackBerry's down about 2%. Broadcom's down 2%. NVIDIA's down 1%. Hood is down 1.3. Rocket Lab down 2%. FXI down 1.4. So China's down a little bit, even though BABA was up. Nubank's down 1%. SoFi looking like it's going to go back below 1503 here right now. Palantir's up. Oh my, 118. Holy crap. Holy freaking crap. That was like less than 30 seconds while I was going on other names. All right, we got to ring the bell for 118. Dude, this is insanity. This is like actually, I don't know what to say anymore. I really don't. Let me check the resistance at 119, but I don't know what to say. Does anyone know what to say? Like, this is just like, what do you say? Like, how do you, like, I don't know what to say. 119 has 20,000 shares as resistance. 20,000 shares as resistance. By the way, Alex Karp, CEO of Palantir, is doing a AMA on Twitter. A Ask Me Anything. It'll be live streamed tomorrow at 12 p.m. Eastern. So if you're not on X, I would go to X just to watch that. You could just make an account and see. But they're going to be exclusively on Twitter streaming an Ask Me Anything, and you can put questions below their tweet, and they can potentially ask your question to Karp. So Ileana is going to be hosting it with Karp. I think it's going to be super fun. I might be able to stream it tomorrow, might not. It just kind of depends on timing. But if not, then it'll be on Twitter. SPGI is up 2.3%. Shopify is up 2.4%. Vistra's down. Vertiv's down. Riot's down. CleanSpark's down. Where's Bitcoin? Is Bitcoin down? Bitcoin is down 96,000. That's down 1.25%. The Mag 7 Meta has been on a tear for the past 16 days. Meta is slightly red, 713. Microsoft red, 410. Apple 230. Google 188. Amazon 232. Nvidia 132. Tesla 345. And then Amazon here flat. Now, I did make a move yesterday on Amazon. I sold my long calls on Amazon for a slight profit, like a 2% profit, and I bought shares of Amazon. I bought 10 shares of Amazon. Eventually, I'll get to 100 shares by the end of the year. Why did I do that? I did that because I think we're going to see some volatility over the next coming months just with all this tariff talk. And I think although Amazon and Google had great earnings, Google I still have my long calls for, because Google I'm more comfortable with the in the moneyness of those calls that I bought them at. But for Amazon, I think there's a world where Amazon could dip pretty dramatically, and then those calls get, there's time pressure on those calls. So I sold those calls, and I'm just buying stock of Amazon instead. I think it's just a little bit more safer going into the next couple months, especially given they had a really good earnings, but the stock couldn't catch up to the earnings, and that's probably because the macro is just not allowing the stock to go higher. So now I'm just going to buy stock of Amazon. So I bought 10 shares yesterday, sold the long calls, made like $100, $200 on the long calls, and going to just DCA into Amazon. But that's the only move I made yesterday right here. Apple right here at 231, Microsoft at 410, and Meta at 714. Meta's been green basically for the past 10 days. Basically for the past 10 days in a row, Meta has been green. Joby's going down because of Archer. Yeah, Joby right here down 5%. How bad is Archer? Archer is down 8%. To be diluted by 300 million and to only be down 8%, I think is not that bad. I really think that's not that bad, actually. So if you're an Archer shareholder, I would just take that on the chin, knowing that money hopefully is going to be used in the right way. It's not GameStop where they're just going to, do whatever with the money and actually do nothing with the money. They should have been buying Bitcoin, in my opinion, back in May of 2024. But, they're not just sitting on the money. They're probably going to use it probably with their defense partnership with Anduril, right? They probably have costs that are associated with that to meaningfully scale. Palantir 117.77. That's up about 1%. We just hit 118. Let's see if we can get back there. The strike on my Google calls is 150. I paid 60 in premium, so I need Google to be above 210 by January 2026. For Amazon, I need it to be above 250. And I think it'll be there by 2026. I just personally didn't feel like taking that risk, given some of the volatility that's probably coming up in the next coming months with all this tariff discussion, China retaliating, all this stuff. Amazon obviously has exposure to that. So to me, I'd rather just have the stock versus the long calls, because the whole goal is to exercise the calls and sell calls against them, which is more capital efficient. But if the calls lose a ton of their value because Amazon not tanks, but let's just say consolidates down 10%, then that's not, going to be beneficial. So rather just be in the stock in this point. In Google, given the strikes at 150, I need Google to be at 210. I think Google's just in a much better situation to be above that strike price by January 2026. So for Google, not selling those calls. Robinhood down 1%. Baba's up 2% again with that Apple partnership. The rest of the market's red. AMD's flat. UiPath's red. PayPal's red. Wow, PayPal, dude, has been a disaster. PayPal's been a disaster. Absolute disaster. Noah Breaks, thank you for the $99 super chat. Amit, love you, bro. Here from the beginning. Bought heavy around $8 a share and just retired. Thank you for your timeless contributions to the community. Palantir as F. I appreciate you, Noah. Thank you for being part of the show. First of all, congrats on retiring. I mean, that's what the market's for, right? To get some financial freedom. And it took a couple of years for the story to play out, but my, oh my, has the story played out. And congrats to you. From 8 to 112, or to 118, I should say, is quite the journey. And it has happened. 118.3. Again, 119 has 20,000 shares. There's not a lot of resistance there. So there is a world where Palantir can hit 120 if the volume's there. But thank you, Noah, for the super chat. Appreciate you. Thanks for being part of the show. And congratulations on retiring. And you get to retire off Palantir, which is super, super dope. Is Tesla going green? Tesla is trying to go green, 348.99 on Tesla. Bitcoin 97, Apple 231. Where's the S&P 500? That is 603. That's slightly flat. And Palantir like a champ, still holding on to 118. My goodness, bro. All right, so I'm going to ask the same question I ask when Palantir makes a big run in the chat. I'm going to make a poll right here. Question is Palantir you nervous or excited right now? Nervous means I think it's and I'm afraid. Excited is nope, not worried about it. If it drops, I buy the dip. If it goes up, I continue to stare at my portfolio instead of do my work from home, which is probably what all of you guys are doing right now. And you don't think too much about it. Uber 7843. Uber has been a great story this year as well, dude. Uber was named the top pick from a lot of different firms. I think from Evercore, it was named a top pick as well. And Uber's up 20% year to date. So Uber's been doing very well. Meta right here, 713. Google 188. Neo is down about 3.5%. Palantir again holding on to the green, even though the rest of the market's red. The rest of the market is not green. I mean, Palantir holding on to the green is uniquely special today because the rest of the market is not cooperating. CrowdStrike's red, Fortinet's red. Tempest is up 9%. I guess Tempest is cooperating. Goodness gracious. This is the Nancy play. Tempest 30 to 74 in a matter of 3 weeks. In a matter of 3 freaking weeks. 60% of you say excited, 40% of you say nervous. You know, that's different from last week. Last week, it was 80% excited, 20% nervous. So that is a material increase in terms of people that are being nervous, which is fair because, like, the stock is worth like $40 billion more than it was last week. So I get that people are getting a little nervous here. I don't know, dude. It's just at this point, like, when does it stop? Does it stop? Does it consolidate? Does it take a break? I mean, we're talking about 2 to 3% a day on Palantir since earnings. So in general, we're up like more than 50% for the year now. The majority of that, I think basically 27% of that 50% coming in the past week. And the original 25% was just recovering from 65 to 80. So, I mean, this is just, I don't know what to say. It's pretty incredible. It's pretty freaking incredible. NVIDIA right here is green. NVIDIA goes green. Okay, cool. So NVIDIA getting some green. Now we need to see if Tesla can go green, but Palantir is still holding green. 118 of the market open. NVIDIA 134. Back to 134. I just hedged SMCI. Got all my out. Okay, so Chris, you took my advice then. You took my advice, Chris. The young grasshopper gives the Jedi some advice here. I mean, look, I don't think that's a horrible play, dude. I don't think that's a horrible play. Where's my SMCI calls now? Let's see where they're at. Is the mic okay? Is the audio good or no? Is the audio good? Hold on, let me see. Mic's cutting out. Is the audio good? Hold on, let me see. Okay, hold on. Is it good now? We're better? Let me change it. Hold on. Okay. Is it better now? Let me know if it's better now. Let's see. Let me know. It's low. All right, let me switch it. Hold on real quick. Let me switch it back to my normal mic. Let's see if this works. Cool. We should be good. If it doesn't work, then I'm going to unplug my thing. SMCI down through. SMCI is recovering a little bit. It's recovering. Better. Yes, better. I think the mic sounds fine. You're good? Okay, cool. We're good. Okay, so let me check the SMCI calls. Where are they at? Also, who's in SMCI? Put in the chat if you're in SMCI. Put in the chat if you're in SMCI. Dude, half of you saying the audio is good, half of you saying it's bad. I think it's okay. Yes. Okay, I'm gonna assume it's good. If it's really bad, then just be angry in the chat and like say it's bad. See, someone says it's cutting out. Someone says audio is fine. Like, it's just okay, dude. We're still up $3,000 on SMCI. We're still up on this. We were up like 3,500 yesterday. That's not too bad. We were up 60%. Now we're up 51%. So we're still in this. And I don't know. Now I'm going down with the ship, bro. Now I'm going down with the ship. Now we got to see what happens to SMCI today. It's fine now, but it was cutting off before. Okay. So I'm going to assume the audio is good. I'm going to assume the audio is fine. And if it's not, then again, just get angry in the chat somehow and I'll notice. Netflix right here, 1019, GameStop 2704, SMCI. Look, here's my thing on SMCI. It pumped to 43.55 yesterday. My logic was, all right, it's giving us the earnings pump. We should get out. Now it's down 3%, which I actually like because that's a little bit better of a setup. And if Jay Powell is bullish or dovish in 18 minutes, we'll be watching him live, then I think that could be bullish for SMCI as well. So that's an argument for kind of just going down with the ship and seeing how this plays out. Also, if they say we have a clean bill of health, if they come out and they say we're not a fraud anymore, again, this is a gamble. So if I lose it, I lose it. But if I win, hopefully we win, in a more asymmetric way. If they say we're not a fraud, I would imagine the street has I don't think the street's priced that in yet. Right? Like I think the street's excited about their growth because they think Nvidia is going to crush numbers. So SMCI has to crush their numbers as well. Even if their margins suck, they're trading at 12 times earnings. So their growth is going to be phenomenal. It's going to justify the premium that the street gives it. But the street needs to know, are they a fraud or not? And if they're not a fraud, I think that's not priced in, right? And we should see a little bit of a pump. So I don't know. I was going to sell yesterday. I was going to sell at this point. We'll see how this ends up playing out. It will pop to 50. Yeah, I mean, I like that it's down today, so it has, especially if they have good numbers. This guy, first of all, even NVIDIA, servers that are serving the GPUs are going to do well, right? Otherwise, like unless SMCI is losing all their business to Dell, but that's not happening. Like SMCI has been a very, very good partner with NVIDIA for a long time. So outside of the accounting issues, which are legit, but if they're not as important because it's just like something that happened and now we move on from it, the numbers should be fantastic. And so this should be, I don't know, it's worth the gamble at this point. If I didn't sell yesterday, I'm not going to sell today, and we're just going to hold on and see if they can end up playing out. Now the audio is cutting out. Oh my gosh. Are there aliens in California as well? Okay, hold on. Let me see. Is it just my movements back and forth? I don't think it's that loud. I'm gonna increase the gain on the mic as well. It might make it a little louder, but now it's good. Okay, now it's good. Yeah, maybe it's moving around too much. Okay, I'll try to stay in one spot. Jay Powell speaks in 15 minutes. So in 15 minutes, we get Jay Powell, and we'll see what he has to say later in just 15 minutes. Okay, it's good. It sort of fades in and out. Sensitivity settings. No, I think that's just me going back and forth too much. I had too much of California's fun flower this morning. So that's probably why that's I'm kidding. But yeah, it should be okay. Okay, cool. So what else do we see? Okay, NVIDIA 134.20. That's probably what I asked you guys helping as well. Bitcoin getting a little bit of a pump, 97. Wow, Shopify goes red, huh? Shopify goes red and Palantir still holds 118. Holy crap, dude. Palantir. Okay, so where were you guys yesterday when you saw 117? Where were you guys? When you saw 117? I was in a coffee shop and I was just like, this is crazy. It was just crazy. Where were you guys when you saw it? Because I wasn't live, so we weren't able to kind of celebrate it together. So I'm curious where everybody was. I literally tweeted this at 2:15 p.m. so 5:15. That's where I tweeted it. That's where I saw it happen. I was waiting for you live. Yeah, I wish I could go live, dude, but I couldn't. Oil prices are up about 1.27%. So you got oil getting a little bit of a bid here. That's probably also messing up equities a bit. Scrolling YouTube, waiting for the market close. Dude, I wish I could go live. Elon, Sam Altman, Palantir, so much was happening. I just couldn't get to go live. But yeah, I was just like, this is insane. This is just freaking wild. And my early Valentine's Day in a restaurant, I love it. By the way, guys, the meetup is officially happening Thursday. and it is officially happening. So let me put the link again in the chat. We already have the place booked, and a bunch of you guys reached out, and you actually said, "Hey, if that place doesn't work out, we own a couple restaurants." You guys can wow, that's very nice. So shout out to those that reached out and like literally offered their families restaurants for the meetup. That's just very, very, very nice. Here's the Telegram in the chat for those that want to join. But it's gonna happen. Okay, dude, are you guys messing with me with this audio bad thing, or are you guys serious? Like, what is going on? Oh no, you're not. It's actually bad. Okay, I'm gonna take off this mic. This mic's being stupid. Plug this. Plug it back in. Good old unplug and plug. Maybe that helps. Better now. No, this one sucks too. Ugh, bad. Bad. Okay, what about this? Yeah, the internet's fine. It's not the internet's fine. How do we resolve this? How do we handle this? This is my laptop. Yeah, this is my laptop. It's how do we handle this? Okay, but this should be better, right? So this is not my actual microphone. This is my computer laptop, but I think it has to be better than what we were just using. This better? Yeah. This is not perfect. It's definitely not going to sound as good as the actual mic, but hopefully it's better. It's a laptop mic, yeah. Yeah, I don't know, guys. It's being stupid today. I don't know. It's being weird. It's not the internet. The Airbnb has great internet. It's not that. It has to be something else. But all right, at least we're better here. Sorry, guys. It should be better for now. We got J Pound 10 minutes. We'll take a listen to him, but yeah, this is hopefully a little bit better. Okay, so let's see what else we got going on. J Powell is going to be important. Tempest is up 12% right here. Is Palantir tanking? Palantir is down 0.05%. That's tanking. Tesla right here, 346. S&P 603. NVIDIA 133.89. Shop 118. Netflix 1017. Hoodie 5587. Again, they have earnings tomorrow, 2947 on Rocket Lab. And then Baba right here continues to gain up 1.16% here. Yeah, I don't think it's the internet, dude. I think I would have to restart StreamYard, which I'm not going to do right now, but it's just being kind of dumb. But hopefully the microphone audio is not absolutely horrible. Maybe the bell will fix it. Oh my gosh, this is so dumb. I hate when it does this. But we'll roll with it. We'll roll with it for now. All right. So J Powell in 10 minutes. Here's what I'm thinking J Powell's going to say. I think there's a couple of things J Powell's going to comment on. Number one, I think he's definitely going to comment on shelter inflation, and he's going to get asked a lot. He's probably going to get into a little bit of a shouting match with, wow, temp is 14%, with Elizabeth Warren and some of the other left-leaning politicians on, when interest rates need to come down. Again, his response is going to be that we can't control interest rates. We rather control the impact of inflation on interest rates. So I think it's going to be a lot of nothing burger answers, but if we can get some answers that signal that he is more open to cutting than not, then I think that's bullish. The problem is we have CPI tomorrow. And because we have CPI tomorrow, I don't know if he's going to be able to say anything that good. Because does he know CPI a day before? I think so. Palantir right here, 116.4. But if CPI is bad and we get a little bit more of a hawkish J Powell, then we can tell he knew that CPI was bad. If he's really dovish today, I think CPI is good tomorrow, because he probably wouldn't be that dovish a day before a crappy CPI report. So I think that's going to be important to kind of figure out how this plays out. But when he talks, we'll get a much better understanding of what's going on. Joseph says, I'm just happy my NVIDIA position is green. Well, the people who bought the dip, they've been good on NVIDIA all year so far. But yeah, for now, Nvidia holding up is actually, I mean, I've been impressed by how rapidly it's held up. Getting back to 140 would be exciting though. 134 right here would be nice, but getting back to 140 wouldn't be the worst thing in the world. Can you pin the meetup link for Thursday? Yes, I'll pin that in the chat. I'll put that right here in the chat. Do you guys think he's going to say anything different though? Because I think, like, I don't know. For me, I think that there's nothing more he's going to be allowed to say that's that different than what we already know. And so here's a Telegram link for the California meetup. But because of that, it might be a nothing burger, but the market also might go green if it is a nothing burger, because then the market's like, all right, so what were we worried about the whole time, you know? And I think that's something we're going to look at as well. Are you coming to Southern California? Yes, later in the year, Southern California. Not for the next couple months, but later in the year. Grab's been flat. Yeah, Grab has earnings on the 19th, so Grab I'd expect to be flat until the 19th. But once they report earnings, look, I think we bottomed on Grab. Maybe I'm wrong, but I do think at 30% cash, this is the bottom. There could be some results that I could see them tanking on. I think it's a bit unlikely. Obviously, a ton of tariffs and inflation and dollar going up could tank them as well, but I think their guidance for Q4 is going to be pretty strong. And it'll be a slow mover, but nonetheless, I do think we get closer into the fives after earnings. But it's going to take some time to see that play out. I think he's going to signal no new cuts and the market will hate it, but then get over it. Yeah, that's true. And he kind of already did that, right? On the freaking earnings, not the earnings, I guess his FOMC meeting is kind of his earnings, but on FOMC, he basically said we are in no rush to cut. So I think he's going to like continue to say that, and Elizabeth Warren and people are going to get mad because they want to get rates to come down, but he's going to say, hey, we don't need to. Like, markets, economy is doing fine. We literally don't need to cut. And if that's the case, then, you know, I think the politicians are going to have to try to figure out how to navigate that with Jay Powell. SMCI, a nice little recovery, dude. It was down 6%. Now it's down 2%. So it's holding its weight. Again, yesterday's 18% pump was very, very aggressive and really didn't give back that much of it. WTF is that Tempest candle? Yeah, I don't understand, bro. Is anyone really buying Tempest here? Like, does this thing deserve to go up at this point 90% for the year just because Nancy bought it? I don't know if it deserves that. Chad, good morning. Morning Amit in the community. Chad, good morning to you. Thank you for being here. Congrats to Chad as well. Just hit 10,000 followers on X. And so more and more of the world is learning about the Palantir message as per Chad on X. Chad, we're about to listen to Jay Powell in 5 minutes. I don't know if you love listening to Jay Powell, but we'll see if you enjoy listening to him today. Tempest right here up 14%. Palantir down about 0.22%. Nvidia 134.03. Chad's probably rolling his eyes thinking about Jay Powell. This is the difference between Chad and us. Like he's a builder. A lot of us here are more like obsessed with investing. Chad's like, oh, Jay Powell, that's exciting. And us, we're like, Jay Powell, that's exciting. You know, it's just is it different? Is it different? Like when I have kids, me and my kids are going to be watching the FOMC meetings together in the future, bro. I'm going to be like, watch how he coughs, watch how he stresses a certain intonation of his voice on that syllable, you know? Like, these kids are going to learn about Jay Powell real quick. Well, Jay Powell's not probably going to be the Fed chair by the time I have kids, but whoever's the Fed chair, my kids will learn how to read body language and day trade based on how many coughs we get. So, dude, I really hope that when I have kids, it's not a situation where, you know, like when you try to like I'm sure some of the parents will relate to this in the chat, but like when you try to get you like something, so you try to get your kids to like something, and then your kids end up resenting it, right? Like Like my mom liked art a lot growing up. Now, granted, I have no talent in art whatsoever. And she tried to get me in art, but I just never really got into it, like actually drawing. So like mom's actually a really good painter. Like I have to show you guys some of her paintings one day, but I just never got into it. And there's a level of like sometimes, like if you're a basketball player and you try to get your kid into basketball, sometimes the kid just like they like naturally reject it, right? And so I'm deeply into debate and the stock market. And I know how transformative those things have been for my life. And I want my kids to like join the debate team, right? Learn how to communicate and care about the stock market. But I don't want them to rebel against it, because once you push them into something, like sometimes, it's like there's just like this natural hesitation to go the opposite direction. So I need to figure out how to make sure they actually love debate and the stock market as well. Because if not, then I don't know what they're going to get into. Also, I want them to play the piano. And that's more selfish. Because I sucked at music my whole life, dude. I can't read sheet music for anything. Like I wanted to be like the next greatest musician, the next Michael Jackson. And then I like read sheet music and I was like, what are these like what is like, it was a foreign language to me. Like I naturally was never good at like reading sheet music. And by extension, like being good at like actually playing instruments. So I really want my kids to like be good at the piano and the guitar. Granted, I still have a lifelong goal of learning how to play the guitar one day. I think it's going to happen one day, because the guitar is just too cool to not learn how to play. But we'll see. J Powell in 2 minutes, folks. J Powell in 2 minutes. He's not live yet, but he will be live in a bit. And we'll see if he's there. I would watch CNBC with my kid when they were like 10 and kind of regret it. The stock market is something you introduce them later on too early and it kind of skews the world a bit. Yeah, I agree with that as well. I agree. You got to make it really fun at 5 years old to get them to be into it, I would imagine. Because the stuff you introduce them at a young age, dude, if they have a bad first impression of it, they might just never care about it. And the stock market is not one of those things that I would want them to not care about. Bro's going to disown his son if he doesn't like Palantir. Dude, my son or my daughter is going to be managing the Palantir stake one day. So when they sell it, they better know that their dad's going to be crying somewhere. Hopefully up above, looking down on them, just nodding his head on why they're selling it. But nonetheless, no, I'm just kidding. I'm kidding. If you want to take your profits, take your profits. I'm being hyperbolic here. I'm just saying, I don't know what in 10 years is like, if I have kids by then, is Palantir as important in my life as it is? I think it will be. I don't know if I'm going to be covering it every single day. Could you imagine we're doing daily Palantir 10 years from now, bro? Could you imagine we're doing Palantir weekly 10 years from now? That would be insane, bro. Freaking 2035. Hey, everybody. Welcome to Daily Palantir episode number 1076. Like, that'd be wild, bro. But if that does happen, it just shows. And at that point, dude, Palantir went to $1 trillion. Like, it's like, if we're doing Palantir weekly 10 years from now, Palantir went to $1 trillion. It's going to be happening. Your kids are going to be rebelling, talking about how Palantir is the most evil company in the world. Dude, if my kid comes up to me and says, Dad, you're investing in the most evil, yada, yada, I don't even know what I'm going to say. I'd be like, okay, so like, what do you think bought this house? Like, what do you, like, how do you like, oh, it's like, it's the most evil company in the world, but like, come on now. We are not going to go down that route. Dude, that's really important as well. Controlling some of the media they consume. By the way, JPow's not live yet. I'm going to switch to him as soon as he's live. He's not live yet. But sometimes kids can consume certain types of media and it can like literally change their entire life. But we got to see. JPow's not live yet. He is not live. I am waiting for him. I'm refreshing. He is not live. He's probably going to be live in like 3 minutes. He'll be live. Big Bear AI is up 7%. Okay, so this one's pumping. I think this one's still squeezing, but it's still pumping. Oh, he probably released his opening remarks. He's not live yet, but they released it before. So Powell can maintain policy restraint for longer if economy remains strong and inflation does not move towards 2%. Okay, so that's higher for longer is basically what he's saying. Again, he's not live yet. He's going to be soon, but we are probably getting his remarks. Let me see if I can get the full remarks right now. They usually put it out a couple minutes before he goes live. Okay, here we go. So I got some of it. Our policy is well positioned to deal with risks and uncertainties. We do not need to be in a hurry to adjust policy. The U.S. economy is strong overall. Inflation is closer to our 2% goal, but still somewhat elevated. We can maintain policy restraint for longer if the economy remains strong and inflation does not move toward 2%. The unemployment rate is low and steady. The labor market is solid and not a source of inflationary pressure. However, we can ease policy if the labor market unexpectedly weakens, aka rate cuts. We are prepared to ease policy if inflation falls more quickly than expected. Okay, cool. I think he's live now. Let's go to him and we'll go from there. Here we go. Jay Powell testifying live.
As President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives, which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB. How can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created in families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions. Even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating. But in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs that went really documented, but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right. First of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this: after having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries. And that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down CFPB. No more cop on the beat looking out for a family of four in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB Acting Director Vogt, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I had my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too big to fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any.
Any
law
changes, any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very good.
If in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. Now, I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks. It's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks. And I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area. I would guess. Our
expectation would be, and the markets would expect that it would be neutral with regard to capital
in that range. But I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And when the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about, is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this. It cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired. But you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised. Yes, I can go into some details. I mean, one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country. And that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet. And I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you. And thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern. And you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under 10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes, yes.
Okay.
That's
And
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe
And
so.
you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has 10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, of quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky. and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does.
That was good. That was
I'm
good.
not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we used. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're gonna do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs, to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reed.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra. An increase of inflation by nearly 1%, economic growth depression, and, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made him.
Shout out to Derek in the chat with the $100 super chat. Derek knows the person I'm interviewing today. So, yeah, that's why he's excited. You guys will know in like a week when the podcast comes out. But thank you to Derek. Appreciate you, brother. And this testimony, I'm not going to lie, guys, is kind of boring, but I guess we'll hear what he says. The last exchange was a little bit more exciting in terms of some of these questions. But, yeah, it's typical J Powell. We didn't get anything new from this yet.
Himself, Sherman, what would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
Thank you.
So again, even the Trump questions, right? Really simple, like J Powell's just not tolerating any headline or clickbaity type of answers.
Communicated back and forth about synthetic risk transfer as a potential danger to the banking system. And could you give us some insights on how we can improve financial stability by regulating these transactions more appropriately?
So what we've been doing for some time now is looking at them on a case-by-case basis. And if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that it gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. Was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, while housing is difficult, two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you, Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking Member, for holding this important hearing. And thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden administration were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before, at the end of 2019, so before the pandemic, was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion. And by 2022, the Fed's balance sheet hit an all-time record $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with the chairman is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. Obviously, you used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes. So what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking, then, if things were to remain stable, you'll continue to unwind the balance sheet. You'll continue the quantitative tightening. Can't give me a range on this. Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Thank you, Mr. Chairman. Chairman Powell, good to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I'm going to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we're starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stable coins in particular within the regulatory perimeter. I know my friend Bill Haggerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place, and how it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notional idea of same activity, same regulation in the non-bank sector. If you'd like to wax briefly on this question around stable coins and how we think about them in the same point of, if they are similar to other activities, should they not have the same regulatory structure?
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum. And I'm going to need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit, Ms. Chopra, we were talking about $55 million to Virginians. I do have to mention this more for my colleagues. Tim Kaine and I did a teletown hall last night. Lots of things happening in Virginia. Normally we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall. We had 60,000 last night. I have not seen anything like that in my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her a assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe. Yes, we've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that there's been reports in the media about the thinness in the treasury markets, the number of additional bonding that we're going to have to do, particularly if with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining treasury debt payments for possible fraud and suggested that our debt might not be as high as possible. We all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
So you think it would be, from a Fed standpoint, the President of the United States starts to saying we're not going to pay our treasury debt. You're going to have no view at all?
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in and out of this hearing room today. Conversations about a co-president referencing Elon Musk, referencing the work that Doge is doing. I think it's important to remember that President Trump ran on this. I mean, he said, we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's afternoon nap time. And so I just think we need to be a little bit more honest about what's been laid out and what's actually occurring. Chair Powell, I want to discuss some monetary policy issues, but I first want to highlight a few supervisory items. We unfortunately started 2023 with several bank failures in which the Fed itself admits its supervisors were, quote, too slow to ask. The question has been asked earlier about who was fired, who was not. I think that there's some real merit to having accountability that we have not seen there. In the aftermath of those failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard. And then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret. Or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested by the CFPB director each quarter and then directly deposited by the Fed. Is that how that works?
So the director of the CFPB requests money, and we, under the law, we send that money. Yes.
So, in fact, but Dodd-Frank actually prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
up
director.
to I think 12% of our. There's a ceiling on that, but that's correct.
So just to level set, how many times, has the CFPB funding request been denied by the Fed?
We don't have the authority
Zero.
to deny it under the law.
Zero, right?
Zero, yeah.
Yeah, that's what I thought. And by the way, I'd like to applaud the current administration and acting director Vogt for inserting some accountability back into the agency by pausing these quarterly just blank checks. On that, I know there's been a lot of conversation around the Bureau over the last few days, but I do want to focus on those last couple of years, particularly the $2 billion the CFPB received from September 2022 up to the last receipt on January 2nd, 2025. Congress specified in statute that the Fed shall fund the CFPB through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has no current earnings. It has a balance sheet of negative $200 billion. So instead of the recent audit statement saying the Fed is funding the CFPB through assessments on its reserve banks, Mr. Chair, there are only two statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB to fund transfers. So what authority exactly did the Federal Reserve have to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments to do so.
Appreciate it. Thank you.
Senator Van Hollen.
Thank you, Mr. Chairman. I would point out that candidate Trump did not run on implementing Project 2025. In fact, when he was asked on the campaign trail about Project 2025, he said, "I don't know anything about that. Who are those people?" And yet he early on and quickly installed a key architect of Project 2025, Russ Vogt, as the head of the Office of Management and Budget, which we know is the command and control center for the budget overseeing all federal agencies. And that's what Elon Musk is doing now. He's implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening over at CFPB, the Consumer Financial Protection Bureau, because that is the cop on the beat to go after fraudsters and scammers who cheat Americans out of their hard-earned money. And they have returned billions of dollars to our constituents, to the consumers who have been victims of these scams. And in doing so, they've earned some powerful enemies who want to shut them down. And Elon Musk is doing that dirty work on behalf of those fraudsters. And there's something especially twisted about the richest man in the world shutting down an agency that helps victims of scammers and fraudsters recover just a little bit of their hard-earned money. And I find it especially interesting that the new self-declared head of the CFPB, Russell Vogt, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office," unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to not to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it? No, it wouldn't. And yet that's what the so-called Doge boys, efficiency boys, are doing. In addition to that, they're rummaging through the private, very personal, sensitive information of Americans at the Department of Treasury. So it seems to me that the Trump administration and Elon Musk are focused on everything except what Donald Trump said he was going to focus on during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge due to the nationwide rise in the cost of eggs. They said that's going to be a new surcharge, and other restaurants are following suit. You've seen that, right, Mr. Chairman?
Yes.
And at the same time, the Trump administration has restricted federal agencies from providing the public with information about the bird flu, avian flu, which is part of the cost of egg increases. So what we're really facing here is an administration that campaigned on bringing down prices and is not doing that, did not campaign on Project 2025, and that's what they're doing. But when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs. Our Republican colleagues are also talking about passing a tax bill that gives way disproportionately to the super wealthy, and which will add trillions to the deficit by their own account. They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the deficit and debt put upward pressure on inflation? Isn't that simple math?
You know, it really does remain to be seen what tariff policies will be implemented, and I just think it would be unwise to speculate when we really don't know. I mean, we see proposals, but it's so hard to say what's going to happen. And
Well, last time the Trump administration was in office, the Fed took actions because they were concerned about the impact of increasing tariffs. Isn't that the case?
we wound up cutting rates in 2000 and I guess it was 19, but it really was because growth slowed and confidence was weak and the global economy was weakening. So the net effect of all that's what we look at. And it's really not just tariffs. It's tariffs, immigration, fiscal policy, and regulatory policy. And those will all go into a mix, and we'll try to make sense of it and do what's right for monetary policy.
If you could just get back to me, I'm not on the question of increasing the deficit by trillions of dollars and what impact you believe that has on inflation and prices. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being.
She's the Bitcoin senator for the Strategic Bitcoin Reserve, so maybe there's a crypto question here.
With us today. I think you're aware of what direction my questions will take. They will be focused on the bank supervision function of the Fed. And I'd point out that when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress. Ben Bernanke said something similar in 2013 when he told Janet Yellen that, quote, Congress is our boss. Do you agree with that statement?
Yes, the way I always say it is that our supervision, our accountability runs through the legislative branch, not through the executive branch, as it does in many other forms of government.
Thank you for that, because I wouldn't have guessed that that was going to be your response. The way that the Fed has behaved for the last 4 years in its relationship with the U.S. Congress is to thumb its nose at Congress. Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally misled me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's general counsel, one of the staff that's sitting behind you today, who said, quote, "The Fed generally resists legislative prescriptions." Now, to me, that's thumbing his nose at Congress, the very people that you and I just agreed you are responsible to and the people depend on. So this is why the American people think there's a deep state. This is why they think there are faceless bureaucrats making policy to hurt the very people of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued by this committee in a timely manner?
Sure.
Will you instruct your staff to be complete in their responses and not to obstruct the oversight functions of this committee?
You know, we always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that. But we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of the oversight that we have over the Fed. Do you commit to disciplining or removing any staff that are found to have engaged in debanking activity, furthering Operation Choke Point 2.0, or other misconduct?
I can't make an open-ended commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to take a fresh look at that. In fact, I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
Senator Smith.
Thank you, Mr. Chair and Ranking Member, and thank you, Chair Powell, for being with us today. I appreciate your presence here. I'd like to start with the issue of the rising cost of home ownership, something that I know is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about home ownership and making home ownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of home ownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding.
All right. I think that's it for the testimony today. I'll put the link in the chat for anyone who wants to watch it. We didn't get anything that crazy out of that. We got a couple funny moments, but I mean, the last question, J. Powell, was just like, sure. It's like, whatever you want me to say, like whatever you need to feel happy, I'll say that. But yeah, look, so first of all, I mean, I got to get out of here in like 15 minutes, but let's just analyze what's going on in markets, and then we'll be done for the day. Tesla, goodness gracious, this thing, my God, it's down 4%. So here's the thing. It's $36 away. So that's what? Basically 10% away from the 300s, a little bit less than 10% from the low 300s. At this point, Tesla is down almost 15% year to date. It is giving up a significant amount of the Trump pump. I mean, guys, this thing was $487 on like December 12th. So, I mean, it's been a pretty dramatic reversal. It was almost touching 500. Now it's closer to 300 than 500. As much as I think like buying the dip could make sense here and loading up, there's two caveats here. We've seen this happen with Tesla every time. Like once it gets into a downtrend like this, it tends to be nasty. Having said that, the counterpoint is that it also can reverse really violently as well. And we've seen that a couple times this year, although we're still down at 336. We've seen major reversals, even intraday, of 4 to 5%. And it makes you just have all the FOMO in the world. So I don't know. I mean, on this one, if you're buying the dip, you just got to be ready for it to go even lower. But I wouldn't be surprised if we get a reversal back to 350 tomorrow based on just general market movements in the context of Tesla. My question to everyone in the chat is, why is this happening? NVIDIA's green. S&P is green. Palantir's down 2%, but Palantir has been up a lot, so that's okay. Shopify's green. Apple's up 3%. I mean, you got a lot of big techs that are going green. Tesla's going red, and Tesla's following a back-to-back day of basically down 4.5%. Tempest is also dumping. Where's Tempest? Tempest. Yeah, wow. This thing was up 14% this morning. Now it's up 1%. So I think we're seeing a variety of some of these pumps kind of fade off as J. Powell speaks. Uber could be a reason. Tariffs on steel could be a reason. Doge could be a reason. The street's upset about that. I do think politics is taking more in effect. Also, the Openai stuff could be a hell of a reason, dude. I mean, Elon's bidding for Openai. I think there are some investors that are just like, dude, like we already let you get away with Twitter. Like we're letting you run SpaceX and all these other companies. Now you want to take over Openai. And whether you agree with that or disagree with that, the perception of that could be that he's doing a lot and people are getting upset about that. Now, is that a long-term reason to sell Tesla? No, but short-term, of course, it could create a little bit of pain. 337.50 down at 335.71 was the bottom. So if we break 335.71, we might have a little bit more pain to go. But the more I keep thinking about it, the more I feel that there is a bit of political, I guess, sentiment that is very negative that's hurting the stock. Again, long term, does that matter? No. Short, is that going to stop FSD and Optimus? No. But like in the short term, yes, people are definitely going to be upset about it. Along with the fact that people are up a lot, dude. People started buying this thing when it was 250 back in October. So it's not like people don't have gains on this. And I think you might have a little bit of retail saying, wait a second, you know, we're up a lot. Like, let's protect our gains into a volatile 2025 and just sell right here. But this type of a dramatic decline feels a little bit more institutional than just retail in terms of the sell side pressure. Tesla, retail has been a net, it's been 50-50. I'm looking on Robinhood, they've been a net buyer, and it's basically 50%. They bought 5 days, sold 5 days as well. So retail's kind of flat, at least on Robinhood. I don't know. This maybe money managers coming in. There are a significant amount of institutions or retail investors that are definitely taking some profits here, or at least downsizing. Some of you guys are saying you already took profits on your Tesla. That's fair. Anduril also had an announcement. Yeah, let me pull that up real quick. Anduril did say they had some big announcements, so I'll pull that up in a second. But this is the one that's getting hit the worst. Boycotting is a real thing. The flip side to this is that there are also people that want to buy Tesla to support Elon from a political perspective. The question is how many of those actually are buying versus how many of those are rejecting Teslas. Robinhood is down 2% as well. Alibaba's up 3%. AMD's up 1.8. Nubank's down 0.44. I mean, to be honest, the entire market's kind of either flat or down. We have some pockets of green, but the majority of it is red. Affirm's up a little bit. TSLL is getting hit. This is why trading TSLL is tough, just because it moves 2x the leverage against Tesla. Pinterest right here down 2%. Duolingo's down 3%. Google 186. Grab is up 0.5% for some reason. Uber is down 0.34%. And then Tesla right here trying to hold 337 currently on the day. SMCI, Oklo, Kava, Archer, Sound, Serve, CleanSpark, all down more than Tesla. So okay, so that makes sense. The thing is, all those names are obviously a bit more speculative, right? Like Oklo doesn't even have revenue. Tesla is the largest company that I can see in the markets that is down. The rest of those names, I mean, those names are kind of used to 4 to 5% swings. But Tesla's been getting 4 to 5% swings every day. That's the weird thing about it, dude. It's like almost like the narrative is shifting, and that's kind of annoying when the narrative shifts overnight, because the narrative was like pretty strong even a week ago, and it's either the earnings are catching up to it or it's politics. It's something. I don't really think I have the best explanation for it, but I think we'll find out. Intel's up 10%. See, Tesla being down 4% and Intel up 10% is insane. Like the fact that people are selling Tesla to buy Intel, it's like, what? I don't know why Intel's going up. I don't think there's an acquisition argument. I don't think, is there any acquisition news? I don't see any acquisition news. Intel, JD Vance, Intel stock soars after JD Vance vows AI chips will be made in the US. Really, guys? Really? JD Vance probably said this in some random freaking answer to a reporter, and that's what Intel's pumping on. So JD says, hey, we're going to make our chips in the US, and Intel goes up. I mean, I guess it's logical. It's just, we don't know if we're actually making our chips in the US. JD's saying that because it's very American, and he wants to sound patriotic. I don't know if we're definitely going to be making chips in the US anytime soon, but look, I guess there's the narrative. That's the narrative that's taking it higher. Palantir's down. Yeah, I mean, look, well, Palantir, I think we all have to get ready and expect that Palantir can take a breather. That is not a bad thing for Palantir to just consolidate in this range. So I think that's fine. Tesla's the one I'm trying to wrap my head around, how it's getting beat up as badly as it's getting beat up. I mean, what is your gut telling you about SMCI by the end of the day? My gut is telling me that it's going to go up. But again, that's my gut. And I don't know if I would trust my gut on this, but my gut feeling is they're not going to be a fraud and the stock's going to move on that news. That's my gut. If I'm wrong, then I have leaps. So we have 2 years to see this play out, but we would unofficially be long SMCI if this thing tanks dramatically. But again, I don't think it has to tank unless the numbers suck. The numbers are not going to suck. So then it comes to the fraud thing. If the fraud thing is good and the numbers are good, I think this goes up. I think like I don't know. That's how I'm thinking of it. So I'm holding, guys. I'm not selling. A lot of people ask in the chat, are you selling your calls? I'm not selling my calls. I'm holding them until earnings. And tomorrow they'll either be up or down. And we'll see how it plays out. Optimus is vaporware. See, I disagree with this. I don't think Optimus is vaporware. I think Optimus is very real. I think the street doesn't know about it yet, which is fine. The street tends to be late on a lot of things. And when the street knows about it, that is going to fundamentally change the unit economics of how you think about Tesla. Now, the timelines that Elon put out might be vaporware, because do they really scale to 500,000 bots by 2026? I don't know, or 2027. But that's not why the stock is down, dude. The stock's down on something else. It's not down on earnings, in my opinion. It's not down because of FSD. It's not down because of Europe registrations or China registrations. I don't know. There's something else. Maybe it's the political angle, but maybe it's the OpenAI bid that's getting people annoyed that like it's that he's spending too much time on that. But I mean, let me ask you guys a question. So for those that are Tesla shareholders in the chat, what do you think about Elon making an OpenAI $97 billion bid? Good or bad? Like, as a shareholder, do you care about that? Do you not care about that? Do you feel that's a issue? Do you think it's not an issue? Do you think it's a nothing burger? Drago says it's just getting rid of the Trump pump. So the Trump pump was from what, 275 essentially. So it went all the way to 487, which is essentially a 77% bump. Now we're at 337. So that is a 22% bump. So 50% of the Trump pump has faded for Tesla. You got 22% left before it gets right back to where it was on November 5th. Not good, not good, not good. Mike says this is just something you have to mentally be prepared when you invest in Elon. I 100,000% agree with that. I mean, if you're going to buy Tesla, you're buying Elon essentially. So You have to be ready for that. Bad nothing burger. It's a group bid, isn't it? It is a group bid, but Elon's leading it, right? Elon's the guy who's taken the bid into OpenAI to make it happen. Literally everyone hates it. Doug says, I'd love for him to control OpenAI. See, you also have Tesla shareholders like Doug that are actually on board with him going through. So it's just like, I don't know. This is going to be one of those things the street has to figure out what they care about or not, especially if it's just a PR thing and Elon's like actually not trying to buy them, but he's trying to like scare Sam Altman. So that could also be an angle here. But I think we'll have to see. SMCI right here down 5%, Palantir down 2.5, Tesla down 3.9, SoFi holding 15. Meta is in talks to buy a Korean AI chip startup. Interesting. Of course they are. Meta, the one Mag 7 that just has executed flawlessly this year so far. Wow, 1.2 million on a premium for a Meta call. Strike is 725 for next week. Look at that. That's an unusual option move. 725. Someone bought 1.2 million worth of Meta call options for those 725 strike expiring 2/21. You definitely got some people expecting a larger Meta move. Okay, here was the Anduril news that came out today. Anduril is taking over the U.S. Army's Integrated Visual Augmentation System, IVAS program, pending Department of Defense approval. We are now fully responsible for production, hardware, software, and integrating Lattice to greatly expanding warfighter capabilities. Palmer wrote a blog post called Turning Soldiers into Superheroes. Okay, so we'll read this later. It's a little bit long one, but IVAS, interesting. So this is actually a pretty big deal, bro, for them to get this. Managing the entire Palmer Luck is back in VR. Yeah, dude. For those that don't know Palmer Luck, he came up, he made Oculus. Like Oculus was his invention, and then Zuck's bought it for $2 billion. The fact that he's getting back into it with IVAS, which is the Integrated Visual Augmentation System for the Army, that's actually pretty full circle, bro. That's actually pretty full circle. It's actually very cool. Very, very, very cool. This is going to end up IPOing at like 100 billion. Dude, depending on how crazy the market can get over the coming years, yeah, there's a shot. I mean, I think the IPO is closer to like 40 billion. If they're raising at 28, probably an IPO at 40. But if there's the liquidity, they can go higher. And that would be a pretty expensive IPO. SMCI down 4%, Palantir down 2%, Uber is flat, Tempest losing all of its gains. Tesla, it's not showing you enough conviction that it's going to hold that 335 intraday low right now. Volume is 45 million shares right here on Tesla. So we're going to see. We're going to see. Amid Tesla trades at a crazy multiple with no growth, it is still overvalued. I don't think that is incorrect. Obviously, that this is not a company that's growing anymore. That's just objectively true. The numbers are pointing to no growth. However, and this is the however that's annoying, but it's an important however, it doesn't trade on its numbers, kind of like Palantir, right? Even though Palantir is accelerating growth pretty aggressively. Tesla trades on a narrative that FSD and Optimus will create, and really FSD will create explosive levels of growth that the world has never seen before. And the thing about trading on a narrative is as soon as that narrative dies out or that narrative loses some steam, then the stock loses some steam as well. And people start looking at the numbers and they stop caring about the narrative. And I think that's what's happening with Tesla right now. But the catalyst might be more than just auto registrations. 335 back there. So it's got to hold 335.71. If we fall below 335.71, that is a new intraday low. It's like 10 cents away from getting there. It is 10 cents away from getting there. People asking me on my thoughts on Hood earnings. I think Hood is going to do great. I don't know how the stock's going to react. We'll see tomorrow. I think the stock's up a lot. So there's a world where the stock tanks, even if the company does good. But for me, I'm much more concerned about the company than the stock. But I do think the stock has a shot to really do well tomorrow. I mean, if they crush the numbers the way we think they can crush the numbers, this could be one of the, their best earnings ever. But historically, Hood is flat on earnings. It's not as volatile. It's like maybe 2 or 3%. So The last earnings was a bit volatile, but they missed for some weird reason on EPS and revenue. So besides that, I think they're going to be good, but we're going to have to see how the numbers interact with the stock. We are 10 cents away from the intraday low on Tesla. It's just holding above that to get there. And the video earnings is going to be fun as well. Brandon says, I got futures today on Hood. I love it. Awesome. I still don't have futures yet. I still don't have P&Ls either. I really would like P&Ls and tax lots. Like, come on, Hood. I need some of those features. But at least I got the credit card. That's good. All right, we just broke the intraday low. We just broke it, 335.34. Wow. Goodness gracious, Tesla. My goodness. Thing is not slowing down. Now you got a lot of people coming for the exits. Trying to get out of here. Quantum's getting crushed. Is Quantum getting crushed? Quantum. It's down 4%. I mean, Quantum should be used to this type of volatility. D-Wave's down 2%. The other ones are down like 3 to 4%. S&Ps just went flat. Rocket Lab's down 4%. Rocket Lab, does anyone know why Rocket Lab went up 12% yesterday? I remember by the end of the day, I was like, oh, why is this up 12%? But regardless, Rocket Lab, back down 7%, but it's holding 28, 29 very nicely, like really nicely. All the spec names are down. SoundHound, Archer, Big Bear, Faraday Future, MicroStrategy, GameStop, and AMC are actually up. Oklow's down 5%. Kohler's down 10%. And all the quantums are down. And then crypto, where's Bitcoin? Bitcoin is also, I guess, down 2% from 98 to 96.5. So that's down. Grab is up. Yes, Grab is up. Rock Lab launched a bunch of satellites yesterday. All right, well, there you go. That's why it's up. Apple's up because they partnered with Alibaba in China for bringing Apple AI. So Apple's getting a nice rebound, dude. This thing was almost below 220 last week, 235, up 3.2%. They have to be more valuable than Nvidia, right? Yeah, but Nvidia's close. Apple is still number one, but Nvidia's 200 billion away. Eric says smart money is laughing out loud and backing up the truck. Yeah, I mean, look, the Ron Barons of the world are probably looking at this and they're laughing because of just how long they've been in the name and they've dealt with volatility. The question is just going to be, where does it go short term to get here? Oh, Steve's definitely going to be liking this. Steve's still holding on to SMCI, dude. This morning he was like, we're holding. Let's see. Maybe this hits up. Okay, let's do this poll in the chat. I see this comment a lot. Here's the question. Is Tesla, here's the question. By the way, 51% of you said excited, 48% said nervous for the Pouncer poll. Is Tesla a falling knife? That is the question in the chat. I think we'll end it out on that question. What do you guys think on that one? The audio is getting wonky. All right, now it's definitely time to leave. If the audio is getting wonky, that means the stream is staying. It's time to end. Oh, they got a Black Sky contract as well. Oh, that's good. That's definitely not bad for Rock Lab. Contract as well. Yeah, audio is a little down. Some of you guys said audio is fine. Okay, good. I think some of you were trolling me earlier in the show, bro, when you kept saying audio is bad. Some of you guys were trolling. You guys were serious, but we're a couple trolls here. I'll consider adding Tesla starting at 280 or below. See, I see this comment and then I'm just like, okay, I understand the sentiment for why that's the case. But then it's like that. It's what always happens with Tesla, right? Everyone's like, as soon as it tanks, they're like, all right, I'll wait another $50 down. And then it never gets to that price. Now, granted, does Tesla get to 280? Who knows? But I feel like this is going to be one of those questions, right? Which is like, does it actually become a falling knife and you get excited below 300? Or does it rebound at 3010 or 310, 315 and no one gets their price target? Right? This always happens with Tesla. I've been guilty of this many times as well. And so it's one of those things where I guess we're going to see. Okay, 70% of you said it's a falling knife. Wow. Huh. All right. I guess we're going to see. Doug says, I said I was going to buy 135 and it reversed to 185. Dude, I remember I said I was going to buy 125. Then it got to 140. I was like, all right, $54. And then it got all right, let's do word of the day, and then I'll get out of here. We will not be on the market close today. We will be back tomorrow. We have AMA tomorrow. That'll be live on X. We also have Robinhood earnings tomorrow. That's going to be really important. And then, yeah, I'm doing a podcast today that you guys will find out pretty soon about, and hopefully you'll enjoy it as well. Okay, what do we got? What do we got? Word of the day. We're gonna go to website. We can get here. Oh, I like this word. I've heard this word before. Oh, and then SMCI today. So again, Chris and Matt are streaming it on the Cash Flow Chronicles. So I'm not going to be there. I'll be checking my phone. Look, they're going to be, what, 1 p.m.? I'll be in an Uber at 1 p.m. So I'll be able to see at 1 p.m. what happens. Hopefully something good happens, but we'll see if we get to be victorious on SMCI. Ruminate.
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 To ruminate is to think carefully and deeply about something. To ruminate is to think carefully and deeply about something. I don't know, dude. I feel like I ruminate every day about a ton of topics. Obviously, I'll be ruminating about Hood tomorrow because that'll be really important. But I've heard this word before. I've heard this word before many times. To think deeply about something. I like to ruminate on Tesla. Kind of sounds like urinate, bro. That's what kind of sounds like. Oh my gosh. This is the link, Cash Flow Chronicles, right here. There it is. There's the link. You can see there. Amit likes to ruminate when he mispronounces words. Yes. And Tesla likes to urinate on everybody right now with this stock price. So can you give your last thought about Robinhood before tomorrow? Well, I'll be here in the morning tomorrow. So Robinhood will be after hours, right? So I'll talk about it in the morning. But I think Robinhood crushes it. I don't know what happens to the stock, but I think they crush it. I read Morgan Stanley's report last night. Morgan Stanley's report is amazing. I mean, they were like, dude, this thing is going high. They have an $88 bull case, dude. It's like their top pick for the year. So they're estimating Q4 is going to be good. Q1 is going to be good. I think the same. I think Vlad's going to crush it. I think the fact they're doing a video, dude, like you don't do a video to give some stupid results. You know, you give a video because you're about to crush it. So I think it'll be good. It'll be good results. And then we'll see how the stock ultimately reacts to it after the results. All right, cool stuff. Again, the meetup is happening in the Bay Area. We have a location for it. I'm going to put the Telegram link in the chat again if you want to join. I think there's like 200 people that signed up already. So I don't know if 200 people actually will show up, but the place that I got is big enough for 200 people. So I'm expecting like, I don't know, maybe 20, 30 people show up. But we will have enough space for everybody, and it'll be fun. It'll be really cool downtown Palo Alto. Okay, there's the link right there. All right, cool stuff. I will see everyone who's there. No market close today, correct? We'll be live for the market open tomorrow. Again, Chris and Matt, they'll be streaming SMCI, so I might be able to tune into their stream from the Uber. And yeah, I think you guys will enjoy the podcast. This will be a fun one today that I'm going to do. Also, by the way, dude, I didn't find anyone to do the video and audio, so I'm producing this thing myself. I'm about to be a whole videographer, audio engineer today. It's like got all these devices and shit, dude. So like, you know, I actually know how to produce really well when it comes to this stuff because back in the day I used to like manage my own audio video stuff. So like it's just going back to what I used to do a couple years ago. But yeah, I'll be managing the whole thing. So this will be fun. This will be fun. It'll be a one-man production to get this done, and I think you guys will enjoy it. Paper Gains will be at the meetup, by the way. If you are at the meetup, in fact, I'm going to be coming with Paper Gains, pulling up in a cyber beast to the meetup. So, because we're going to do the market close at his studio, and then we're going to drive over together to meet up. So if you see a Cybertruck near the location, me and Mr. Papergains are probably going to be there. So it'll be fun. So for those that want to meet Jason, you guys will get a chance to meet Jason. Ruda says, hopefully your audio will be better than today. Yes, hopefully the podcast audio is much better than it is today. Jason will have an intro when entering the pub. Dude, I should get a loud ass speaker and play the intro when we walk in with Jason. That'll be great. That'll be great. All right. Thank you, everybody. Hopefully you guys have a good day. We got a bunch of earnings after the bell. I will see you guys on the market open tomorrow. And we will keep going from there. We want a full review of the Cybertruck. Okay, I'll take a video of the Cybertruck. I was in it yesterday for the first time, and it was, dude, I want a Cybertruck. Like I want to buy a Cybertruck. It's like it was a tank, bro. It was just so much like, it was just like, you're just in it. You're like, wow. You're like, it's a different experience, bro. And Jason, he's like rented it for the week. He's thinking of buying it. That's why he rented it for the week, and I think he's gonna end up buying it. So super, super exciting stuff. All right. Thank you, everybody. I'll see you guys tomorrow morning for the market open. Bye, everyone. Have a good one.